On behalf of the I welcome you all to the webinar on improving audit quality of external aided projects in India that is being organized by the Committee on Public and Government Financial Management jointly with Asian Development Bank and World Bank. We are honored to have with us from ICI CA Ranjit Kumar Agrawal ji, Honorable President ICI, and CA Kimisha Soniji, Chairperson CPGFM. From Asian Development Bank, Mr. Srinivasan Janradhanan, Director, Financial Management, South and Central Asia Region from Manila, Philippines Office. From ADB India Resident Mission, New Delhi Office, Senior Financial Management Officers, Mr. Krishnendu Baran Sarkar and Mr. Anshuman Bardhan. From World Bank, Mr. Manoj Jain, Lead Governance Specialist in Global Governance Practice and Country Focal Point for India, and Mr. Puneet Kapoor, Senior Financial Management Specialist. We are grateful for your presence today and look forward to an insightful and engaging discussion. Today's theme of this webinar is projects funded by the World Bank and the Asian Development Bank are key to addressing India's developmental challenges. However, to ensure their success and long-term sustainability, robust auditing practices are required to verify the proper use of funds. This webinar will explore the challenges and best practices in enhancing audit quality for external aided projects in India. Focusing on the requirements of international funded bodies like the ADB and the World Bank in strengthening oversight mechanism. I once again thank you all for your joining in today's webinar. I am confident that today's webinar will be valuable learning experience for all the participants. Now I invite CA Kimisha Suniji, Chairperson CPGFM for introduction of theme and apprise about CPGFM.
Yeah, thank you, Anuragji, and good afternoon, everyone. As the chairperson of the Committee on Public and Government Financial Management of the ICI, I warmly welcome all the viewers to this webinar on improving audit quality of externally aided projects in India, organized by the committee in collaboration with the Asian Development Bank and the World Bank. I extend a heartfelt and warm welcome to CA Ranjit Kumar Agrawal ji, Honorable President ICI, for his unwavering support and invaluable guidance on various committees matter. And I also extend a warm welcome to Mr. Srinivasan Janardhanam, Director, Financial Management, South and Central Asia Regions from Asian Development Bank's Manila office, and Mr. Manoj Jain, Lead Governance Specialist in for India from World Bank. And I also welcome our other speakers from ADB India Resident Mission, New Delhi office, Senior Financial Management Officers, Mr. Krishnendu Baran Sarkar and Mr. Anshuman Bardhan, and from World Bank, Mr. Puneet Kapoor, Senior Financial Management Specialist. So I would also like to thank our moderator, Anuragji also, he is co-opted member of this committee. And we are truly honored to have an esteemed group of experts with us today. And their collective experience in public financial management, governance, and audit quality, particularly for external aided projects, will definitely greatly enhance today's discussion. And just to brief you, certain development and initiative of Committee on Public and Government Financial Management, the committee is actively engaged in improving financial management system at all level of government in India, including local bodies. And our initiative include conducting workshop and e-learning for government officers, also providing technical input to the Government Accounting Standard Advisory Board and International Public Sector Accounting Standard Board (IPSAS). And we are also offering certificate courses on public finance and government accounting, and also am I audible?
Yes, ma'am.
Yeah. So committee has also collaborated with MAUA to enhance the quality of financial statement of urban local bodies being uploaded on City Finance portal on a sustainable basis. And in addition to the committee organizes training in multiple vernacular languages, for example, in Hindi, Gujarati, Marathi, Tamil, as well as apart from English also, and collaborates with several departments to enhance financial management capability. And during last year, the committee entered into an agreement with PMU and UK PFMS, funded by World Bank, to organize series of training program for 200 account staff of ULB of Uttarakhand in Hindi. The committee also organized a 2 day training program for the official of Directorate of Municipal Affairs, Nagaland at Kohima. Further, in Maharashtra, the committee organized training program for 562 accounts office of municipal councils and Nagar Panchayat jointly with the Directorate of Municipal Administration, Maharashtra in Marathi. In Tamil Nadu, the committee entered into a MOU with Commissioner of Treasuries and Account, Ministry of Finance, and in pursuant to that, continuous training programs are being organized. And about this, our particular collaboration in India, externally added projects funded by institutions like the Asian Development Bank and the World Bank play a crucial role in driving development across sectors such as infrastructure, healthcare, and education. So ensuring the quality of audit for these projects is essential to safeguard financial integrity, improving transparency, and ensure that resources are used effectively. So high quality audit help identify inefficiency and prevent misuse of funds and ensure that projects objectives are met. So ICI is pleased to collaborate with the ADB and World Bank to enhance the quality of audit for externally aided projects in India. As part of this initiative, a technical guide or guidance note is being developed, and this webinar has been organized to discuss the challenges and opportunity in improving audit quality for externally aided projects in India, with a specific focus on the role and expectation of institutions like ADB and the World Bank in ensuring robust financial oversight. So we are confident that the insight from today's expert panel will provide actionable solutions to improve audit practices and ultimately enhance the effectiveness of externally funded projects in India. So with this, thank you and wish you all very happy learning.
Thank you so much, ma'am. Now I would like to request here Ranjit Kumar Agarwal, President ICI, for his words of wisdom.
Thank you very much for inviting me. Thank you very much, Anurag, for inviting me for this very important event. Very respected Srinivasan ji and Manoj Jain ji. I can also Kisendu, Baran Sarkar, and Puneet Kapoor. We had a meeting last month in our institute, and how the ADB and the World Bank and the ICI can come together, because this is the very important subject which we are discussing today. The financing of the externally aided projects play a big role. Like if you see the in India 2021, more than $1.7 billion we have received from World Bank alone for the externally aided projects. So as far as infrastructure is concerned, good governance, double entry system, single into double entry, corporate governance, so many water, electricity, power, so many projects, the World Bank, ADB, and other agencies like USAID help India. But the problem is that there are many challenges, because every donor agency has a different set of SOP, separate guideline, what is their requirement. So how we can synchronize all these things put together? Like one of the challenges we are facing, like impersonation of accountant, like somebody can forge the signature, somebody can certify wrongly of the various projects. So we come out with a UDI, unique document identification number. Through this mechanism, the online real time, all the agency can verify the credential of the person who are certifying. On the same line, how to enhance the audit quality of these various externally aided projects. So we are in a close coordination with all these three agencies, how we can come out with a comprehensive framework for the audit quality as a technical guide or a guidance note, for that all these projects which are funded by this agency are live up to the expectation of this vision of this agency, and the real intended benefit can go to the last person in the last mile. That is the whole objective. And last month we decided to have a webinar and take the input of these agencies. They are the pillar of the corporate governance in India through ADB or a World Bank or USAID. They are funding the various projects. And once somebody is funding, they also need the fund should go to the intended use and the quality should be maintained. So if this is the minimum requirement of this agency, it is our duty as a robust regulatory organization like ICI to help them. And that's why we have organized this webinar for the benefit of all the stakeholders. And whatever suggestion after listening to the learned speaker, the committee will note down, and then we can work out a comprehensive framework policy plan so that this agency can be properly supported by the ICI with their best audit quality mechanism we have, because the institute is the leadership role as far as standards of auditing and the accounting standards are concerned, whether it's a government accounting or it's a private sector. We all are doing a lot of standards which are aligned with the international standards. And now the new area of artificial intelligence and sustainability reporting are also coming. So all these aspects are also part of the guideline which these donors are looking while framing their framework. So it's my humble request to all of you, just listen to them, see their requirement, and then we can also help them to coming out with a better corporate governance structure as far as ICI is concerned. My compliment to Srinivasanji, Manojji, Pranojji, Anshuman, and Krishnendu for taking your time and now sharing your thoughts with our membership at large and those who are dealing with your projects across the country, so that we can work together in the better corporate governance way. Thank you very much to all of you once again, and thanks to Kamisa Soni, the chairperson of this committee, and the secretary Seemaji and other who are spearheading these projects to support all these three externally aided agencies in our endeavor. Thank you very much.
Thank you so much, sir. We have Srinivasan Janardhan with us. He is one of the directors in ADB's Public Financial Management Division and leads the delivery of financial management services for ADB's sovereign operations. Srini holds a bachelor's degree in commerce from Delhi University, India. He is a fellow member of the Institute of Chartered Accountants of India and an associate member of the Institute of Cost Accountants of India. With a professional career exceeding 37 years, Srini has devoted over 30 years to development finance. In the past decade, within the Public Financial Management Division, he had led teams responsible for updating ADB's financial management policy guidance and creating numerous technical guidance notes. He actively represents ADB in major forums like the MDB FM Harmonization Group, INTOSI, and IFAC. Thank you so much, Srinivasan Janardhanji, for joining with us. The participants are curious to listen to you. Over to you, sir.
Good afternoon, good evening, rather, Anurag, and thank you very much for introducing me. And Mr. Ranjit, can you hear me?
Yeah.
Okay. Mr. Ranjit Agarwal, Ms. Kamisha Soni, my colleagues from ADB and the World Bank and the AAIB, ladies and gentlemen, a very good evening to all of you, and welcome to the webinar on enhancing the quality of audit of externally aided projects in India. It is a privilege for me to connect with you all today. I extend my heartfelt gratitude to the Institute of Chartered Accountants of India, particularly the Committee on Public and Government Financial Management, for organizing this event with participation from both the ADB and the World Bank. I would like to thank each and every one of you on this call for dedicating your valuable time to join us. I would like to take a moment to highlight ADB's mission. Established in 1966, ADB is an international financial institution dedicated to fostering economic growth and cooperation in the Asia-Pacific region. We operate both in the sovereign space, providing loans and grants either to the sovereign or with a sovereign guarantee. and also the non-sovereign space where ADB assumes the risk directly without a sovereign guarantee. The division where I work supports ADB's sovereign operations. ADB supports the development of our member countries, of which we have about 41 borrowing member countries through loans, technical assistance, grants, and equity investments. India is a founding member of ADB and the fourth largest shareholder. ADB provides policy support for reform in India, both at the national and subnational level, aligning with the government's development agenda. In addition, ADB also provides investment project loans across many sectors, including water and wastewater, solid waste, industrial corridor development, metro rail, power sector, climate resilience, horticulture, connectivity to economic clusters, markets, rural communities, and there are many others which I'm sure I have not mentioned, but there are plenty more. As of September 2024, ADB has an active portfolio in India of about $15.5 billion spread across 73 projects. Effective financial management is crucial for achieving sustainable development. It ensures efficient resource utilization, promotes transparency, and upholds accountability for the use of public funds. Timely and comprehensive financial reporting and auditing are essential for meeting our objectives. ADB's policy requires all our borrowers to submit audited project financial statements and additional reasonable assurance audit opinions on the use of loan proceeds and a management letter, all within 6 months from the end of each financial year. ADB publicly discloses such audited project financial statements after we accept them. The Comptroller and Auditor General of India and private sector audit firms both carry out such audits. In India, about 80% of ADB's projects are being audited by the private sector audit professionals. For this reason, you can understand how much importance and emphasis we place upon ensuring that the private audit profession can rise to our requirements and ensure the quality of the audits that are being conducted. The terms of reference for audit of ADB-assisted project financial statements have been earlier agreed with the government in 2013, and we have now revised those terms in consultation with the World Bank, and we have now submitted the harmonized terms of reference for auditing projects to the government. This was sent to the government only in October of this year, and we are expecting that these harmonized terms will be applied for audits of projects in India for the fiscal year that ends on 31 March 2025. We have noted during our review that there are lapses in adhering to auditing and financial reporting requirements in India. It is imperative that the quality of audits by the private sector audit profession is enhanced to provide ADB with a higher level of assurance. Together with the World Bank, ADB is working with the Institute of Chartered Accountants of India to issue a technical guidance note on auditing externally aided project financial statements. We expect this to be issued in middle of 2025. We are pleased to collaborate with the ICAI and the World Bank on this very important endeavor. We hope that the guidance note will be useful ongoing reference tool for auditors of all externally aided projects in India. In today's webinar, my colleagues will explain in much more detail ADB's financial reporting and auditing requirements and share the significant APFS quality issues that we have identified in India projects. And I would like to just take a moment to explain to everyone who is on this call, and hopefully they will share it with other colleagues also, that the audited reports that you are issuing is being publicly disclosed. It is open to public scrutiny across the world. We receive inquiries from time to time from the civil society on why ADB accepted a particular audited financial statement, although it is not of acceptable standards. So your work is being scrutinized. So we would like to request everyone to take the utmost care and attention in ensuring that they comply with the auditing standards and the code of ethics. We hope that today's webinar will support members of ICAI to take note of the common issues and take effective steps to address them. In conclusion, I would like to say that this webinar is a very interesting and timely topic, and I look forward to listening during the next 2 hours to get the feedback from the participants. In future, together with the Institute of Chartered Accountants and the Comptroller and Auditor General of India, ADB and the World Bank propose to hold regular annual feedback sessions with private auditors to discuss the findings from their review of audited project financial statements during every year. Thank you once more, and I wish a good 2 hours ahead of productive discussion. I'll stop here.
Thank you so much, sir. We have Shri Manoj Jain, Country Focal Point India and Lead Governance Specialist in the Global Governance Practice of the World Bank between us. He is in a career spanning over 30 years. Manoj has had multifaceted engagements in private and public sector. He is currently country focal point and lead governance specialist in the global governance practice of the World Bank. As a lead specialist in World Bank, he is responsible for coordinating, task leading, and managing the public finance work. He has worked extensively in the area of PFM for past 2 decades and is leading several high-profile engagements across the globe. He has authored, published, and contributed to several reports and articles in public financial management arena across the world. He has also worked with Barclays Bank in London in their global loans and syndication desk and with Ernst & Young in Delhi as part of the assurance team. Sir, I would like to request you to address the audience.
Thanks, Anurag, and many thanks to C. Ranjit ji and to Kemesha ji for inviting me to this very important event, which is very, very important, but not only for the World Bank, but for general accountability within India. Because what we're actually looking for is to derive the assurance about the usage of funds. Having actually said that, I'm also a fellow chartered accountant, so it's really great to be amongst my actually fellows. I'm also a company secretary, I'm also a CWA, I'm also an MBA as well. But my actually passion still lies with the accounting world. In terms of the actual collaboration with the ICI, this really goes a long way because I've been working with the ICI for a long time. The first association was way back in 2004 when I undertook a report and observance of standards and code assessment for India, along with the ICAI, and that heralded the entire actually venture into adhering to the international standards, both in terms of auditing and also in accounting, and started the huge journey that ICAI is actually at the entire present juncture. I'm also a part of the committee of the CPGFM, which has been mentioned. I've been a part of this committee for the last 5-6 years. We have done a lot of projects down south and up north out here, which are in the area of urban local bodies, where ICAI has actually provided a lot of accounting assistance in terms of the rolling out of the accrual accounting through their arm by the name of ARF. Also, I have been associated with railways as well when this implementation of the accrual accounting system was being actually done by them. So a very, very long association, and really actually look forward to actually deepening this as we move ahead. In terms of the World Bank, I'll be brief. As you know, World Bank actually quite well. Our main agenda is about actually promoting growth to enhance actually prosperity on a livable planet. And within that, the work that we do is actually related to seeing that the entire governance and the public finance work is of the stringent measure, is of the higher standards. So we've been doing a lot of capacity building work at the subnational levels in India. We have already 7 states: Assam, HP, Chhattisgarh, Rajasthan, UK, and also Punjab, where we are doing IBID finance projects to improve the entire PFM spectrum, starting from planning, budgeting, accounting, financial reporting, external auditing, and ensuring that the entire public finance is used in the most efficient and the effective manner. We've been at this work for the last actually decade, and now we are moving to a next phase of starting to work at the union level as well. We have engaged with the Department of Expenditure, with the Budget Division, with the Office of CNAG, with the Office of the CGA, with the Finance Commissions, with the ARCs, and with the AMCs as well. So a lot of work being done to improve the entire governance and public finance, especially to improve the accounting, the entire reporting part, the entire transparency part, and the disclosures as well. In terms of the work that we do in the World Bank project, what we really ensure is that the funds are used for the intended purposes, as was actually said earlier by the ADB as well. And we need to give due attention to economy and efficiency as well. So for these, the audits are done by the private audit firms in about half the projects in India. The other half has been done by the Office of the CNAG. The World Bank finance projects, which are implemented through the code departments, they are audited by the Office of the CNAG, and the ones which are done by the PSUs or by the societies or by other legal entities which are outside of the core government, they are being audited by the audit firms. We receive about 300 audit reports in a year, and almost about 100 plus audit firms are involved in doing this audit. We have to ensure that the auditors are independent. We have to ensure that the audit standards and the accounting standards being used are acceptable to the World Bank as part of the review process. We also have to ensure that the terms of engagement of the audit are acceptable to the bank as well. In that regard, we have started to work with the CNAG to revise and actually strengthen the current audit terms of reference, both for the private sector side and also with the public sector side as well. And hopefully, over the next couple of months, we should be able to come out with a newer version, which will help us actually improve this further. As was said earlier, we are facing a lot of challenges in terms of receipt of the audit reports, especially on the private sector side. Less than 1/3 of the audit reports are received on time. 2/3 are received in about 9 months' time. And you will see a presentation later on as to how that is affecting the accountability under these projects. We also have issues in terms of the quality of the reporting. Accounting side, we have issues in terms of the quality of the audits as well. And as was actually said earlier, these audit reports are also public. So I think this reached out to the fellow CAs in terms of helping understand as to what are the requirements of the audit, how are they actually supposed to be done, how are they supposed to be reported, how should the audit report be prepared. It will really go a long way in terms of improving the quality of these audits. My colleague will be actually talking about these details later on. But just wanted to say that in terms of moving ahead, we look forward to improving the quality of the audits. We look forward to engaging more. We look forward to engaging with the chartered accountants firms also on the public sector side to improve the core government accounting capabilities. We have seen some private sector chartered accountants in the government, but they are only a handful. And as a result of which, I mean, as you see that there are actually issues in terms of the accounting framework. It's been archaic and it's not been actually changed over the years. We've been trying to work at that for the last decade, and we hope that in the next coming years, we'll be able to strengthen that even actually further as well. Let me just stop at that, and I thank you again for inviting me. Thank you.
Thank you so much, Manoj Jain, sir. We have Krishnendu sir with us. He is a Senior Financial Management Officer at ADB in India, specializing in project processing and execution for power and urban sector projects. He has been with ADB since 2011, initially leading disbursement operations for the India portfolio from 2012. A fellow chartered accountant with over 25 years of experience, Krishnendu previously worked as an assurance manager at a Big Four firm, managing multinational, UN, and national clients in South Asia. He holds a graduate degree in business studies from the CBS University of Delhi. And we have Anshuman Bardhan sir. He is Senior FM Officer, Indian Resident Mission, ADB, specializing in financial due diligence and project implementation support for sovereign operations in South Asia. He is a fellow chartered accountant from India with over 22 years of experience, including a prior role as a partner at an audit and advisory firm. He has extensive expertise in management, consulting, auditing, and tax advisory across diverse sectors. Anshuman holds a diploma in information system audit from ICI. Welcome, sir. I request you both to address the audience.
Yeah. Thank you. Let me just share my screen. Just a minute, it will take. I'm sorry, it's a bit slow here, so I'll just take one more minute perhaps. I'm sorry. My computer froze.
Maybe Anshuman can run the presentation.
Okay, just a minute. Yeah, somebody has taken a control of. Yeah, swap presenter view. Press swap presenter view. Can you just go to the swap presenter view, please? Is it the presenter's view?
We can see the presentation.
Yeah, but it's not a presenter view, I think. I'm just taking a. There was this previous view you just controlled. I'm not able to get that. If you can help me once again, please. Yes. Okay, sorry for this technical glitch. So, good evening, ladies and gentlemen. It is indeed an honor for me to address this esteemed gathering. I extend my heartfelt thanks to Mr. CA Honorable President Ranjit Agarwal, the President of ICAI, for his inspiring welcome address. My sincere gratitude to Mr. Srinivasan, the Director of PFFM ADB, and also Mr. Manoj Jain, India Country Focal Point, representing the World Bank, for their insightful opening remarks, setting the tone for today's vital discussions. Their leadership underscores the importance of this webinar. Today, me and my colleague Anshuman are here to jointly present some insights. Anshuman will begin by providing a broader aspect of ADB's obligations, which stems from ADB's charter requirements, followed with insights into ADB's FM portfolio and the issues faced by ADB during project implementation. This will be followed by measures taken by ADB and our expectations from private auditors. Lastly, what ADB expects in ensuring a good FM in our projects will be presented, focusing project implementation. Now I hand over to Mr. Anshuman for taking over the next slides. Over to you, Anshuman.
Thank you, Krish. It's indeed a pleasure to be amongst this distinguished panel of speakers. Without much ado, I'll go straight away into the presentation. So we'll start first of all by discussing the ADB's fiduciary obligations, which provide the foundational understanding of the principles and responsibilities that guide our financial reporting and auditing requirements. So ADB's fiduciary obligations are laid out in the agreement establishing ADB, also known as the Charter. The Charter came into effect on 1966, August 22nd, and it sets out the requirements for the bank's operations. Article 14 of the Charter requires that ADB takes necessary measures to ensure that proceeds of loan are used for their intended purpose, which is quite similar to what World Bank also has, as mentioned by Manoj. With a due focus on economy and efficiency, ADB must be guided by sound banking principles in all its operations, and ADB pays due regard to whether the borrowers can meet their obligations under the loan agreement. To meet these requirements, ADB requires borrowers to submit annual audited project financial statements, audited financial statements of independent entities, carry out due diligence, and also perform project monitoring activities. ADB also has to maintain a AAA credit rating, which is crucial for it to raise funds at favorable terms, enabling it to provide low-cost financing to its developing member countries. ADB also has to manage the reputational risk to ensure that credibility and sound financial practices and integrity. This helps maintain the donor trust and support. Next slide, please. So executing and implementing agencies are required as per the legal agreement to submit audited project financial statements. So this is an acronym is APFS, and you will see this used many times across the presentation. So the EAIS submit the APFS annually to ADB. We receive around 75 APFS every year on an average. The number of APFS received has declined in 2023 because the submission volume is linked with the number of active projects. Next slide. Next slide, please. As alluded by Srini, so private auditors, can you go to the previous slide? Sorry.
Yeah, that's.
Yeah. Private audit firms registered with ICI play a very crucial role in the audit of project financial statements of ADB-assisted projects in India. Around 80% of the projects are audited by private auditors. These mainly comprise of projects implemented by the state-owned enterprises, societies, urban local bodies, and statutory authorities. Projects implemented by government departments are generally audited by C&AG, but we also have a lot of cases in which these audits are done by private audit firms. Next slide, please.
Yeah, Anshuman, you are in the next slide.
Yeah. In India, APFSs are generally required to be submitted to ADB by September each year. For some projects, a longer duration is also allowed, and the due date, which have a due date of December. Timeliness of submitting the audit project financial statements is crucial for several reasons. Because first of all, it's because it's a legal requirement to comply. It's a requirement to comply with the legal agreements. It promotes financial accountability, and it's also important for decision making and monitoring. The APFS submission timeliness has improved, but still more than 50% of the APFS are not submitted on time to ADB. The reasons for these delays vary from project to project, but in general, we have noted that these are related to lack of qualified and experienced finance and account staff, weak financial reporting systems, and delay in submission of financial statements for audit. And sometimes there is also a delay in completing the audits as well. If we look at the extent of the delay, the 6 to 12-month delay is reduced in 2023 as compared to 2021. But still, the submission of 33% of APFS in 2023 was delayed beyond 12 months from the due date. So the due date, if the due date is September, that means that in these cases, the financial statements were received were beyond after that, like the September of the next year. There are consequences of delayed submission, which vary depending on the extent of the delay. These consequences are outlined in the project documents. ADB actively pursues such matters with the borrowers and with the EAIAs, and to secure compliance on case-to-case basis. Addressing the delay in submission of the APFS is very crucial for maintaining the integrity and timeliness of project financial reporting. EAIAs and auditor must work together to ensure that APFS are submitted within the required time frame. Audit opinions on the project financial statements are largely unqualified. I'm not going into the detail of what the unqualified opinion means, but we would like to present a very interesting point that ADB's review of APFS have identified inaccuracies, inconsistencies, errors, and non-adherence of the financial reporting framework and unreconciled loan disbursement, but the audit opinion is still unqualified. The discrepancy between the unqualified audit opinions and the issues identified by ADB highlights the need for a more thorough and accurate audit process. It is crucial to address these discrepancies to ensure the reliability and integrity of project financial reporting. So in these slides, we'll present the observations that we have while we do the review of the annual project financial statements. These observations which come out of the review are communicated to the executing and implementing agencies. And we have compiled a summary of these observations to help everyone understand the key issues and the importance of addressing them effectively. The first major bucket is like the non-compliance with the audit terms of reference, which was agreed with the CAG back in 2013. We note that the financial reporting framework is not clearly stated in the audit reports that are submitted to us. An incomplete set of financial statements are audited. Form and content of the audit reports do not comply with the auditing standards. The basis for qualified audit opinion and the description and quantification of the financial effects of the misstatements are not reported. And now if we look at the second bucket is the unsubstantiated opinion on financial covenants. ADB requires submission of a separate reasonable audit opinion to confirm the level of compliance with financial covenants stipulated in legal agreements. EAIA are required to provide a substantiation of the computation of each such covenant. We have observed variances in the form and content of the audit reports on financial covenants. Sometimes we receive certificates instead of reasonable assurance audit opinion. Going forward, as a measure to ensure strict compliance, unsubstantiated audit opinions on FC will not be considered as a compliance with legal agreement. The third main issue is non-reconciliation of funds received from ADB with ADB's financial data on disbursements for every year during implementation and full reconciliation at project completion stage. For example, if ADB has disbursed INR 50 million, but the financial statements report only INR 48 million received, and there is a difference which is not reconciled, then it poses a problem because we do not know what happened with that remaining 2 million that was disbursed. There are many cases where we have received APFS which are not reconciled with ADB disbursement, but they do not have any audit observations. Again, as a measure to secure compliance in this area, which will, again, like Krishnendu will discuss in detail the measures, but we have decided that in future, non-reconciled APFSs will not be accepted by us. Management letter submission is a key requirement of ADB. Unfortunately, we have observed that these letters are either not submitted or when provided, they often lack substance and do not serve the purpose. In many cases, auditors simply state that no internal control deficiencies were identified, there are no recommendations for improvements, or there are no updates on prior period recommendations. Again, arithmetical inaccuracies in audited project financial statements, it's not even a topic that we should be discussing, but we are discussing that because we have cases where there are inaccuracies and arithmetical inaccuracies in the APFS that we receive. And it significantly undermines the credibility of the financial information and the financial reports. And it highlights the urgent need to improve the quality of project audits. ADB's review also identified inconsistent usage of the financial reporting framework in project financial management statements. Specifically, EIAs and the executing and implementing agencies often fail to apply the principles and guidelines of the chosen framework uniformly across their financial statements and across the periods. This inconsistency can take several forms. For example, applying the same accounting policy differently in different periods, failing to adhere to the specific requirements of the framework, such as recognition, measurement, presentation, or disclosure standards, selectively applying certain parts of the framework while ignoring others, which can distort the financial information which is presented. Addressing these issues is crucial for maintaining the integrity and reliability of project financial reporting. I will now hand over back to Krishnendu to present the measures and initiatives, expectations from the auditors, and ADB's requirements. Thank you.
Thank you, Anshuman. So I'm going to talk about what measures that ADB has taken over these years. Since 1986, we have started our operations, and in 2013, we have basically taken up the collaborative efforts for improving the financial management situation. With DEA and the Office of CNAG of India, we have for the first time developed an audit terms of reference, which basically gives a set pattern of an audit report, the format of an audit report, and the format of the project financial statements that has actually set the tone for the financial management practice during implementation. Secondly, very recently, we have also harmonized an audit terms of reference because there are multiple requirements for various donors. So we decided that with World Bank, we have come together and drafted a harmonized terms of reference, which was submitted to the government of India in just recently in last month, which is right now sitting with the Department of Economic Affairs and pending CNAG's approval. With ICAI also, we have decided to take some measures. For instance, we have decided to develop a technical guidance note on EAP project audits, so which is expected to be publicized during 2025. So that is in the forthcoming year. And apart from that, various capacity building activities and workshops. From time to time, we take various missions. We undertake missions with the projects, and during those missions, we try to educate our accountants, and also we have discussions with the auditors, and also information dissemination things like this one. We also from time to time we organize these things. Within ADB, we have updated our technical guidance notes on financial reporting and auditing. What we expect from private auditors, we basically expect that you see that these projects are of a considerable size. Each project is about, let's say, about $80 to $100 million in an average. So we expect that the auditors who's auditing these financial statements, they must have adequate capacity. They should have adequate resources in terms of staffing, technology, and infrastructure. And skill and competency and experience, that goes without saying. The person who's auditing, who's attesting these financial statements, must have sufficient degree of experience and exposure in auditing in general, in auditing practice in general. And adherence to professional standards. You have seen that my colleague has stressed that we come across various issues and problems. So we ensure while reviewing any project financial statements, we try to ensure that the auditors have adhered with international standards of auditing or international financial reporting standards or their national equivalents, and they comply with professional ethics at all times. The quality and timeliness of audit reports are also very important aspects. And with the audit report, when they submit, we ensure that there has to be a reasonable assurance opinion. And additionally, we also expect some of our loans where there is stipulated that use of loan proceeds and opinion on financial covenants. Use of loan proceeds is a mandatory requirement in ADB's ADB's projects, but opinion on financial covenants is from a case to case. For example, in our power sector projects, and also in some of our urban sector projects, we require our auditors to give an opinion on financial covenants. And also, lastly, we expect them to provide a management letter along with every project audit report. We expect that all the auditors, they must exercise independence and objective, and they do an objective assessment. They must provide an unbiased review and provide an independent audit opinions along with the additional opinions. Transparency and accountability are the key essential requirements for ADB operations. So in financial reporting, we expect the auditors to fully disclose all audit findings. The qualifications that they make, it should not appear merely in management letter and should be very clear and unambiguous. Consistency in information and disclosure is also a key requirement. These are basically broadly the requirements from the private auditors. ADB's requirements in financial reporting. The components of ADB's requirements are basically audited project financial statements, where we require opinion on use of loan and grant proceeds and also a management letter. These should be submitted within 6 months after end of every fiscal year. And along with that, in some cases where we require our audit or our entities to provide, or project implementing agencies to provide audited entity financial statements, and also opinion on compliance with financial covenants. Now, these are to be submitted with annually as per their legal requirements. Now, as per our disclosure requirements, it is agreed with our borrowers that audited project financial statements are disclosed in our website, and they are guided by our ADB's legal requirement with borrower, and it follows according to the access to the information policy. ADB's requirements in financial reporting. So what are our requirements in in financial statements? We expect a general purpose audited project financial statements, which should cover the total project expenditure from all funding sources. We also require that all ADB's expenditures or all ADB's disbursements are fully reconciled and they are reflected in audited project financial statements. They must be presented in English so that there is a clarity and also accessibility to a lot of our stakeholders across the globe. And they must be presented in reporting currency, which is the functional currency in the organization in the country in which they are operating. So the earnings or the currency of earning the entity where it must be presented in reporting currency, and it must be in the functional currency. Project financial statements, they vary from PFS nature, forms, and contents. They may vary from lending modalities. For example, we have result-based lending, financial intermediary lending, and investment projects. So each and every project should have a different way of presenting their project financial statements, and it may vary from sector to sectors, and also vary from method of bookkeeping. So PFS can be prepared in cash or an accrual basis, and it must be ensured that ADB does not accept hybrid or modified accruals or cash systems. They are not accepted by ADB. They must adhere with accounting standard framework. So in case of an accrual-based financial statement, they must follow international financial reporting standards or national equivalent standards like Ind AS, and Government of India accounting standards issued by the GASAB in case of cash-based accounting system is being followed. And every project financial statements, they must be accompanied with explanatory notes on accounts with significant accounting policies. Now, lastly, the management letter, it is also required by international standards of auditing. It must communicate about deficiencies and weaknesses in organization structure and their internal controls. It should also recommend improvement in internal controls and update the implementation of previous management letters. If this is not issued, we require the auditors to confirm that no management letter was issued. So basically, the form and content of management letter should be like it should give an identification of weakness, an auditor's recommendation for improvement, EAs or the management comments to the findings and recommendations of the auditor, and follow-up action on the previously identified issues and findings. So with that, I come to a close to these presentations. So if there are any questions, we'll be very happy to take. Thank you.
Sir, we will take up the questions after the presentation of Shri Puneet Kapoor ji.
Okay, thank you.
Okay, sir. Thank you so much, sir. And we have Puneet Kapoor ji with us, who is a senior financial management specialist at the World Bank's office in New Delhi since 2016. He is responsible for operation level support and monitoring financial management arrangements throughout the project cycle, and in providing advice and support to clients to strengthen fiduciary assurance over the use of funds. One key function is to agree on audit arrangements with the client, review audit reports, and follow up on compliance. Puneet also works on bank-supported projects in strengthening public financial management systems at the national and subnational and sectorial levels. Puneet is a fellow chartered accountant with over 35 years of experience. Over to you, sir, to address the audience.
Thank you so much, Anurag, and good evening, everybody. The importance of the quality of audit reports have been emphasized by the previous members, and this webinar has come at a very right time. And we are grateful to the institute and the president, Shri Ranjit Kumarji, and others for organizing this webinar. So our requirements of audit are similar to those of the ADB. So now what I'll do, I'll just set the context very quickly in terms of what those requirements are, and then I'll take you through some real life examples of issues which we have seen in the audit reports.
Yeah, please, we can't see the presentation.
Yeah, I'm just loading it now. Yeah, I seem to be a little. Okay, please do let me know when you see the presentation. I don't know.
Yes.
You can see it, please? Okay.
Yeah.
And you can also see the slides moving, right?
Yeah, but these are not full screen. You can make them full screen.
So now what do we do?
Just the PPT mode, yeah.
Yeah, I've already in the PPT mode. Okay.
Okay.
So, yeah, okay. I'm giving the control to the tech support. Right. You will have the control right now. Okay, I'll do it. Okay, so I think that's it. Just going through very quickly through the requirements. I think what is there is also in our charter as well. The implementing agency is required to maintain an accounting reasonably accounting system and prepare the project financial statements. These project financial statements will reflect the entire project operations, resources, and expenditures. These statements are required to be periodically audited by independent auditors acceptable to the bank and in accordance with the auditing standards acceptable to the bank. The auditing standards acceptable in India are the standard issued by the ICAI. The contents and the format of the financial statements, the scope of audit, the process for selection of the auditors are all agreed between the bank and the implementing agency prior to finalization of the project, that is during the project preparation timeline. And this requires sometimes multiple discussions to finalize this. On our part, we monitor the timeliness of receipt of the audited PFS. We review the content and quality of the audit reports and the financial statements, and so we issue what is called an audit review letter. This audit review letter is then sent to the implementing agency with a copy to the C&AG of India as well as the Department of Affairs in the Ministry of Finance. The bank relies on independent opinion for fiduciary assurance. There are two other aspects where we use the audited financial statements. One is to as an input to the assessment of the adequacy and effectiveness of the financial management arrangements in the proposed implementing agency at the time of project preparation. So we do take into account the audited financial statements of the entity. And secondly, these audit reports are used for assessing the continued adequacy of the effectiveness of the financial management systems that have been agreed between the bank and the implementing agencies to be implemented. Our default option is to use the country system in itself. So wherever possible, we try to use whatever systems are prevalent in that particular entity. On the scope of the financial statements, they should encompass the total project activities, not only the part financed by the bank. So any counterpart funding or funds from other development partners are also included. It should be prepared based on accounting standards adopted acceptable to the India. The national standards which are prevalent in India are generally acceptable. The financial statements include statements like the balance sheet, the receipts and payment account, reconciliation of claims to total expenditure, the accounting policy notes to accounts. Implementing agencies submit what is called an interim unaudited financial report. At times, the interim unaudited financial report is also considered as a part of the financial statement and audited. At times we like I mentioned, our default option is to rely on the system of the implementing agency, and wherever we rely on these systems, say in a government company, we also use the entity's audit report for overall assurance, or use these financial statements and the audit report for financial management assessments. Now, who will be the auditor? To the extent we use the Supreme Audit Institution, that is the CNAG of India, for project audits, primarily where the implementing agency is a government department. So as per the country's reporting and auditing practices, government departments are audited by the CNAG of India, and therefore we follow the same system. And in case of implementing agency is a society or a government company or an agency outside of the government department system, private audit firms are engaged to audit these entities. Just to give you a flavor of the large number of private audit firms engaged to do the audit of bank-supported projects in FY 2023-24, where the timeline is 31st of December 24, we expect to receive 250 audit reports. About 50% will be audited by over 100 private audit firms, and the remaining by the CNAG of India. So I think along with ADB, one can assess that there are a large number of private audit firms which are engaged in the audit of projects supported by externally aided projects. The selection of the private audit firms is done by the implementing agency, basically on a quality-based selection method. That is the general practice is being followed by the implementing agency. Statutory auditors appointed by the CNAG for government companies are mostly acceptable. So if the auditor accepts the appointment, then the implementing agency proposes the name of the statutory auditor appointed by the CNAG because of the independence which is assigned to them. In some cases where the current statutory auditor is unable to accept the appointment, the implementing agency also proposes the name of the immediately previous statutory auditor to do the audit of the project. Accepting these auditors is important because then they are aware of the various systems and procedures of the implementing agency, and this avoids duplication of efforts and running into a parallel system. What we expect from the auditors has been explained by Krishnendu and Anshuman. Just very briefly, we expect the auditors to ensure full compliance of the terms of reference that has been determined in agreement between the bank and the implementing agency. So, for example, in case of the CNAG of India, we had agreed on terms of reference way back in 2009, which was also endorsed by the Department of Economic Affairs and the Ministry of Finance. In case of private audit firms, also, although the basis of the terms of reference remains the same, but for each project, a different TOR is prepared specific to that particular project. We expect the auditors to provide a clear and unambiguous audit opinion, and I will come to this in later slides and also explain the importance of this audit opinion. Why should it absolutely be clear and unambiguous? Audit reports should meet the requirements of the standards. It should be issued in a timely manner. The timeline in case of the World Bank is usually 9 months from the close of the financial year. In some cases of central public sector enterprises where the financial systems are very strong, they have agreed to submit the project financial statement within 6 months. We expect the auditors to inform the implementing agency and the bank of major issues in project implementation or achievement of the objectives, either before submitting the audit report, or if not, then at least in the management letter. So we have two major requirements. One is to submit an audit report, and the other is a management letter, and the audit report should follow the various standards. The contents of the audit report and the management letter is that the audit report should be in accordance with the standards. It should include an opinion on the true and fair view, and an opinion on certain specific aspects depending upon the context of the project being run. So, for example, we sometimes require an opinion on the internal controls, almost all cases on the eligibility of expenditures, compliance with bank procurement policies wherever applicable, accuracy of the documents submitted in support of the loan withdrawals, the opinion on the adequacy of the interim financial reports, which is submitted and is a basis for claiming the disbursement from the bank, compliances with the legal covenants. Uh, in addition to this, there is a management letter, which is, of course, submitted to the management, which is a further elaboration of the qualifications, if any, in the audit report, weaknesses in the internal control systems, inappropriate accounting policies or practices, compliance with legal covenants, any issues which have been seen by the auditor in case of the project's economy or efficiency, the results of physical verification, if that is part of the terms of reference, the sampling methodology, say in case of the contracts which they have selected for to do a sample verification, or in case of the physical verification. We welcome recommendations from the auditors to strengthen the systems and the procedures of the entity, and any other matter which the auditor wishes to present before the management or to us. So this sets the context of the requirements by the bank and the expectations from the audit. In the next slides, we will now see some of the recurring issues which we are facing in audit. We have been dealing with this on an individual basis, and sometimes through various letters and all. Also through the audit review letter, which is we are issuing after review of each and every audit report. So some of the issues which we have, which I am going to disseminate, is also the same as faced by ADB, and they have already presented that previously. There is a delayed preparation of the financial statements by the implementing agency or appointment of the auditors. Delayed completion of audit. We see a huge backlog of audit despite time limits of 9 months from the close of the financial year. And this is something which we will discuss in a later slide also. Audit terms of reference not fully followed. The PFS and that is the financial statements and the accounting policy notes and accounts are not signed by the management, but only by the auditor, which is strange because these documents are to be prepared and presented for audit by the implementing agency. Audit observations not discussed with management, so therefore subsequently then the management does not agree to these observations. Project design not clearly understood, or not all the project's documents are referred. So just to give you an example, in case of project design, there are different requirements in case of an investment project financing instrument wherever used, or in case of a P4R, or what is called a program for results. So both of these instruments have a different requirement of financial statements, and also different requirement of audit. At times we have seen that these are not being clearly understood by the implementing agency and or by the auditors, and therefore the reporting was not in accordance or as expected by the bank. The resolution of the previous audit observations have not been satisfactory, and therefore the effect on the financial statements or on the expenditure program, the project expenditure, is not very clear. And internal audit reports have not been considered in cases where an internal audit system has been implemented. This is very important, although in several cases the internal audit reports themselves are delayed, but wherever they are available, these the observations given in these reports have not been considered and have not been referred to in the main audit report by the auditors. Just to emphasize on the timeliness of audit reports, the most latest year which we have is FY23, where the number of audit reports received on time has declined over the previous year, despite giving 9 months to complete the audit. If you see 2021, the timeliness was high because of the extension of the time limit due to COVID. But subsequently, we see that there is a decline, and the delay which is seen is approximately 4 to 6 months. This is something which we will need to see, because this is going to be a major point of discussion with the Department of Economic Affairs and the Ministry of Finance, and they are personally following up on the delays in the audit reports. And I will explain to you the implication of the audit reports later on. This situation is seen both in case of C&AG audits and in case of audit of the by private audit firms. Reasons could be on part of the implementing agency, say delayed appointment of auditor or delayed submission of the financial statements for audit to the chartered accountants. But instances of Delayed audit and submission of report beyond the timeline has also been seen in case of certain projects. Coming to the nature of the audit opinion, according to the data compiled, nearly 90% of the audit opinion are unmodified. That is, they are no, they do not say that it is a qualified or an adverse or a disclaimer. But in some cases where we have reviewed the audit reports, considering the materiality of the audit observations and the seriousness, the audit opinion could have been at least qualified. This is something which I will show you some real life cases in subsequent slides, but this is important. Continuing with the recurring issues, now we come to the audit reports. As I mentioned, these audit reports are not complying with the format and the contents of the reporting standards, and at times you have seen audit reports which are completely at variance with what has been prescribed. The opinion is not clear and is ambiguous, hence we have not been able to fully understand the implication of these observations. There are various caveats attached to it. For example, subject to our observations in the management letter, although the management letter is an internal document, it is also not part of the audit report. And once it is mentioned in the audit report, then per se, we also have to disclose the management letter. Subject to significant accounting policies and notes to accounts prepared by the management, a recurring issue. And in a couple of cases, we have seen the auditors saying that we reserve our comments, and I'll show you an example of this later on. So these are some of the caveats which we see in audit reports, and hence the full implication is not understood. The basis of opinion para is a complete list of observations without and the effect of the qualifications have not been quantified, particularly to identify the questionable and ineligible expenditures. Audit observations are a list of material and immaterial observations without classification, and they are sometimes running into several pages. There are cases where we have audit observations running into, say, 100 and more than 100 cases, 100 pages. Auditors provide emphasis of matter, but they have not mentioned whether their opinion is modified or not on account of these matters. And in some cases, there is an annexure full of observations, but this annexure is not referred in the audit report, and the effect on the audit opinion is also not clear because it is not modified. And the management letter is not elaborate enough. Although we, in all these cases, some of the cases, we have to see, revert back to the management and or the auditor to see, to get some clarifications. And in some cases, for example, 10 to 12 cases of audit reports every year with major shortcomings, these are returned for resubmission by the auditor. But then we also have to go back to the management for discussions with the auditor. A clear audit opinion and the quantification of observation is important to get an assurance on the use of funds and to determine the FM performance of the implementing agency. I think it is important to mention here that based upon the audit report, this is one of the key inputs which helps us to give a rating to the financial management performance of the implementing agency, and an adverse financial management performance which we base on the audit report could have effect on other activities such as restructuring of the project or on the continuation of the disbursements. So this is very important, and we need to be very, very careful about how we are reporting. Now I'll take you to some real life cases, and before that I'll just mention a couple of points because your audit reports, as mentioned earlier by my colleague Manoj ji, this helps into overall accountability. It also helps to identify areas of improvement which we can take up during the course of project implementation. So it is not only that you are reporting back upon to us regarding the true and fair view of the financial statements or on the eligibility of the expenditure, but your feedback is also important in terms of identifying areas of weakness in financial management. And in some cases, I'll just give you an example. There was a utility in one case where based on the audit observations, we agreed upon an action plan, and the borrower and the implementing agency was very keen to resolve these, address these issues, and we had included certain reform action plans in the project to resolve the audit observations. and there have been a degree of success based on this. So this is very important. We also like to emphasize that the audit may be done by the teams going to the field and to the office, but firm should have a quality assurance process within the firm, so that at least these issues are not resolved, and at the opinion provided to the implementing agency and to the bank is very clear and unambiguous.
Puneet, before you move forward to the examples, I think it will be good to talk about the basis of accounting, because we heard from ADB they're not accepting the modified cash or modified accrual. Would you like to elaborate on what World Bank
Yeah,
does?
sure. So actually in most of the cases, because we are dealing with, say, for example, societies, they follow the cash basis of accounting. That is there. But in case of companies, we have an accrual basis, and in government companies, you know that there are cases where they also follow the hybrid. So we try to tend to go along with the policy which has been adopted by the implementing agency, subject to, of course, the audit report. And if the audit report says that there are several accounting policies which have not been followed, or the accounting policy has not been applied consistently, then in those cases we need to engage with the implementing agency to see what best can be done. But normally, the project financial statement, the dedicated project financial statements, are prepared on cash basis of accounting. So that is the case we have in case of the bank projects. These are some of the real life instances which I am going to bring before you. And to reiterate that in some cases, if you see, these are the cases of entity financial statements where we wherever we rely on the financial management system of the implementing agencies, we also go through the entity's financial report, or the financial statements and the audit report thereon, to seek assurance and to see whether the systems are working as intended for the entity as a whole. Because then if there are major shortcomings, then we need to engage with the client to address those issues. So this is a one case where the primary audit opinion says that, in our opinion, the accompanying financial statements does not give a true and fair view. So this is an adverse opinion. But when we go to the basis of opinion paragraph, it says basis for qualified opinion, and surprisingly, there are no qualifications. That is, there are no matters giving rise to the modified opinion. So this is a disconnect between what has been given in one paragraph and the other paragraphs. In this particular case, the observations were under emphasis of matter. So this was a complete confusion created and we have no idea whether we should enter. So also to mention over there that these audit reports are also entered in our system, and the data which you are capturing is the type of the auditor, the type of the audit opinion, whether the audit report was submitted in time or was delayed, the reason for the delays, etc. So in this case, it was very difficult to understand what is the audit opinion which is being communicated. Similarly, if you go to the next one, here we have another case where it says that some of the matters are qualified, some of the matters are disclaimer given in the annexures, but overall the basis of opinion remained unqualified. There was absolutely no idea what was the overall opinion. So they have given a complete list of observations where they say it is qualified, and a complete list of observations where they say that it is a disclaimer of opinion. So we do not know what exactly was the overall opinion. In the example given below this, over here, the auditors have given emphasis of matter paragraph and says that this may have a significant effect on the financial statement, but the effect on the financial statements or the functioning of the society was not given. So another case, this was a specific project dedicated financial statement and audit thereon, and it was again a matter of fact that we had to go back to the auditor and the management to understand what exactly was being communicated. So another example over here, very quickly, it is further to our observations annexed with the report and subject to significant accounting policies and notes to accounts. Now here, although the observations were not qualified, they were not prefixed by except for or subject to, the accounting policies were qualified. Now, the reference to Annexure A, when we go to the Annexure A, they have serious points and that warranted a qualifications, but report did not provide any opinion on the true and fair view as well. So once again, there was a disconnect between what was the observations and what was being reported in the financial statements. In the next case, the auditors write that this was a compilation of audit report, although the assignment was to audit the compiled consolidated expenditure. And this is one case where we have seen where the audit observations ran into more than 100 pages without, so we have to, so material observations, whether immaterial observations, the complete effect was not understandable. Going further, this is one case where this was a basis for disclaimer of opinion, and I don't know what the auditor said, that we reserve our comments, which was completely unclear. So it was not clear what exactly was being communicated. The next case we have so this is a disconnect between what was there in the main audit report and the type of opinion expressed in the annexure. This was the annexure with respect to the internal financial controls over financial reporting, while the main report says that our report expresses a disclaimer of opinion. The annex on the internal financial controls says that it is a qualified opinion, hence there is a disconnect. This is one case where of a government company where we depend upon the systems of the implementing agency, and hence for us the entity financial statements and the audit report thereon becomes very important to assess to the overall functioning of the company as a whole. Now, so these are some of the examples, and before we go ahead, I'll just make a couple of mention over here. Very recently, the bank has also introduced an AI-based tool where the audit reports will now be reviewed by the tool, which is based on the OpenAI chat box, and also using tools such as the sentiment analysis. Now, if the audit reports are the opinion are not very clear, then this tool will not be able to provide correct interpretation, and also will not be able to throw out the results which will be there. So one, we have to see how to correct this. So this is very, very important, and as we go along, we would expect that these audit reports become very important. As has been mentioned earlier by the earlier speakers, we have now recently drafted a standard harmonized audit terms of reference, which will be applicable to audits by the CNAG of India and the private audit firms. And these considers the specific requirements for different financing instruments, like I mentioned earlier, in terms of the project design, whether it is an investment project financing or a program for results, there are different reporting requirements. The format will continue to be agreed between the implementing agency and the funding bank, but included in the project manual. The terms of reference, the new ones will help better articulate the audit opinion. And once this is finalized, we plan to hold workshops to disseminate the terms of reference. So this was the basis of the context and the kind of issues which we are facing. And the importance of the audit reports has also been emphasized, and we hope that going forward and with the intervention of the institute in the capacity building programs, it will be, we can expect some improvement in this case. So I'll stop here and will be happy to answer any further questions which we have. Thank you so much. Over to you, Anurag.
Thank you so much, Puneet sir. Tech support, any questions from audience? Sir, one member is asking, what are the essential tools or programs which helps us to improve our audit procedures or results?
So can I come in here to respond to the query?
Yeah, sir.
Okay, so thank you for your question. And so, if you see, first of all, the one of the most important tool is to see the terms of reference. We, on our part, along with the implementing agency, spend considerable time on drafting the terms of reference, so that the various requirements and the expectations from the audit are spelled out in the terms of reference. So this is a very important tool, and the terms of reference itself also explains to some extent the design of the project, and also refers to certain documents such as the legal agreements or the project manuals, etc., which definitely needs to be become familiar by the auditor. So if these are the some of the points, and as mentioned earlier during the course of this webinar, now the institute and the ADB and the bank, they have joined together to develop a technical guide for audit of externally aided projects. But till such time as this comes out, what is important to see is that please follow the terms of reference in its entirety. They give you certain important guidance on that, and read the various documents. Also, in cases where an internal audit system has been instituted in doing the internal audit of the project, it would be very good to see the internal audit reports and to see what kind of findings are there. I'll stop here. Thank you.
Yeah, so if I can actually add to Puneet, I mean, as we're working on this external audit guide, which will be done as a part of the TA that we're doing with the ICAI, one of the good things along with the TOR is to actually have an opening meeting between the project, World Bank, and the auditors, so that they can understand as to what the project is actually about, what is the expectation of the terms of reference, and if there is any confusion, if there is any document which is actually missing, it can be actually clarified upfront rather than after the conduct of the audit. More often than not, they actually, the entire actually issue arises after the audit has been done, and that's why you can see the packaging of the audit opinion. So, if the entire work is done upfront, the entire coordination of the expectation is done upfront, much will be resolved.
Thank you, sir.
So I think just supplement to what Manoj has just mentioned, we have several cases where during the course of our missions, so when we do 6 monthly visits, or even at a higher frequency, we do try and meet the auditor, both the internal auditor as well as the external auditor, either to discuss the terms of reference or to discuss the audit report. So that is also one thing which we have done. Thank you.
Next question is with ADB team. The participant wants to know what are the key challenges in ensuring audit quality for externally aided projects in India.
Sir, would you like to take that, sir?
Sir, what are the key challenges in ensuring audit quality for external aided projects in India?
The key challenges that I can foresee is that what I see during that we come across is inexperience of the auditors. If the auditor is not experienced in audit, he would not know what documents that needs to be reviewed in the first place, what documentation that he needs to go through beforehand in order to plan his audit. Sometimes I have even discussed with a lot of our auditors during the missions, and I find that even the loan agreement or the project agreement has not been even referred with. So the best thing is that first go through, understand the environment, understand the client environment, understand the project, what is the project is all about, read the PAM, the project administration manual thoroughly, and also the requirements of the terms of reference as already elucidated by Puneet, as emphasized by Puneet. So that is the key important. And if these things are missed, you will not be able to conclude a good audit or a proper audit. Then the audit conclusions are likely to be very much disconnected.
And sir, how can
If I can just add to the challenge, because I guess that it was referred to by Puneet, but I think the matter of emphasis, if I can use the word over here, is the selection of the auditor. What's really actually happening, the audit fees that has been actually determined by several of the government agencies, they are much more lower than the actual work involved. And then when they actually end up paying a very small fees, the kind of audit quality which is expected of these auditors is not there at all. So I think if we agree on a robust process of actually selecting an appropriate auditor, which actually has the requisite size, requisite skills, requisite understanding of what the terms of reference are, much of the issues will be addressed. As part of the entire selection process, and then to actually have an opening meeting to engage with the World Bank. And I think all of these issues can be actually challenged. So if we have the appropriate auditor, I think we can address a lot of challenges.
And so how can the audit process for these externally aided projects be made more robust and effective?
I think that's been actually covered by Puneet's presentation.
So
and
that
by
we have already covered during our both ADB and our presentations. We have given examples, and we have also shared the recurring observations, particularly with respect to following the terms of reference and following the reporting standards. So I think that's those two we like to emphasize. So
okay.
Yeah.
And so whether FCRA projects also get covered under this topic?
FCRA would not be externally aided. This
No,
topic
exactly.
is the externally aided projects. In some of the projects, especially the private, the ones which are done by the IFC or by the finance group of ours, some government entities might receive some foreign funds. They may actually hold some Nostro account. Like I remember ILFS used to be, or ICSI used to be one of the project implementing entities, and they would receive actually foreign funds. But of late, I haven't really seen that we are actually dealing with the FCRA stuff.
And so one member is asking, is there any criteria regarding size or experience of firms?
Yeah, so I think I only did refer that in case of the government, in case of the CNAG list, there is a list by the name of the actually major list of auditors, which is actually pre-certified. Usually, World Bank, what they actually do that in a country, they actually go and actually pre-certify the firms which are eligible for the audit. But in India, the numbers of the firms are so large that is almost an impossible task to undertake. Mostly, we go by the major list as per the CNAG actually panel, and sometimes also we agree on the auditor actually selection process, which will define the size, which will actually define the kind of skills which are actually required, and they might be also actually competitively procured as well. So it would depend on the size of the project, it would depend on the kind of task, it would depend on how actually complex the task is. So there is no standard limit as of right now. You might just actually have a 1 gram panchayat being audited. So there, the auditor skills may be very low as compared to a PSU, which is actually dealing with the power sector and has assets of 8 to 10,000 crores.
Yeah. And sir, is there any measures to curb backlog issues?
Sorry, backlog issues means?
So in terms of the World Bank, we are engaging very heavily with the Office of the CNAG and very heavily with the Office of the DEA as well. In terms of chasing up the implementing agencies, when we started the year of December 2023, we started with about 200, as of actually January 1 of 2024, World Bank had about actually 150 overdue audit reports. By the month of June or July, it was down to about 10 as a result of chasing up the implementing agencies. But many of these are actually received after the due date, and we really want to change that. And that's why the upfront effort to be able to inform as to how the PFS should be prepared, how the audit should actually be done, so that the audits can be actually received in time, which are acceptable and in line with the quality which is actually expected.
Anurag, from an ADB perspective, the measures that we are taking to address the backlog is engaging project by project with the project agencies, also, kind of building their capacity so they can prepare the financial statements timely, because the financial statement preparation is the first step, which, unless and that is done, meeting all the requirements, that does feed into the overall delay. So I think the first step that what we are focusing right now is building capacities, providing training, and doing supervisions when we go on missions.
And also, we also have a stronger financial management rating system. So our monitoring system is quite strong. So and we have a sizable number of project officers. who basically follows up with all the executing agencies from time to time. And our portfolio size is also about 80 to 90 or projects, or 73 as of now. So which is pretty much manageable. So as of now, ADB do not have too many backlogs, if we were to say, in terms of timeliness of or completeness of an audit.
One thing which I think actually Puni did explain, but it's an incentive to give the audit reports within 4 months of the due date. If you are not able to give them, the fund flow for that project will actually stop on the World Bank side. We will actually stop the flows of the fund, and the project will actually come to a halt. So there is an added incentive for them. But this means that they actually do not submit it actually before the due date. They wait for the due date to be over. And many of these audit reports, they actually come within the 4 months time. So it actually works like a double-edged sword.
So one member wants to know how to come on the panel of auditors of WB and ADB, and whether the clients appoints the auditor or WB and ADB appoints the auditor.
So on the part of the bank, we do not maintain any panel of auditors. The auditors are engaged directly by the implementing agency. Of course, as I mentioned earlier, the terms of reference and the selection process is agreed between the implementing agency and the bank. And once the implementing agency shortlists the auditors, these are shared with us, and with a recommendation on which firm is being proposed to be audited. And we do our own diligence on our part, and we communicate whether the auditor is acceptable to us or not. So just to summarize, on our part, we do not maintain any panel.
So same is the case with ADB as well. We do not maintain any panel. The appointment is done by the executing and implementing agency, and we have agreed on the terms of reference for the audit.
Okay. So we already have panel in terms of CNAG's major list of major audit, which Manoj mentioned. Also, we try to ensure that the audit firms which are shortlisted, one of the criteria is that they should be empaneled with the CNAG, because they do one level of checking, and also in case of the major audit firms, there's another level which also ensures that they are independent of the entity which is being audited. But otherwise, we do not maintain any panel.
Okay. Manoj sir, what are the gaps in India's auditing regulations when it comes to externally aided projects, and how can they be addressed?
Yeah, as far as the audit and assurance standards are concerned, I mean, the one that is issued by the ICAI, they are in line with the international standards. So there is not much an issue in terms of the standards gap, but there is a huge issue in terms of the compliance gap. How do auditors interpret that, and how do they conduct the audit? How are the audit fees being actually determined? If you pay peanuts, you will get monkey's jaws. I mean, as they say. So I think it's and that's what I guess that a self-regulator like ICAI has to come into play and has to ensure that the selection process is improved, and also the auditors are under a compulsion to do like the quality audit work. So there is no issue with the auditing standards as such. Also on the public sector side, although India does not have but the Indian standards are in line with the INTOSAI framework. So the standards which are actually followed by the Office of CNAG, they're also acceptable to the bank, and they're of international standards. And the CNAG of India actually does quite a good job. I mean, to be frank, if I were to compare the quality of the audit between what the CNAG does in India and what the private sector does, I would say that actually CNAG actually wins by a long way.
Correct, sir. And so do we reject a hybrid system of accounting for auditing? One of the members is asking this.
When you say hybrid, you're talking about modified cash, or?
Actually, I also unable to understand this question.
I think this is for the ADB, because they said
yeah,
that
was in the ADB's presentation, so maybe you should.
Okay.
Yes. ADB accepts international standards of auditing or accounting. And international standard of in accounting, there are only two methods: IPSAS cash account and the accrual-based accounting. So in India, we have if it's a state-owned enterprise, I mean, it's following an Ind AS, so he is expected to follow Ind AS even in the project financial statements. And if it's a cash accounting, then there is a government accounting standards issued by the GASAB body. So those compliance of those accounting standards will also suffice. But by and large, ADB accepts internationally IFSA's cash accounting standards.
Okay. Committee, do we have any other questions?
No, sir.
Should we conclude this?
I think yes, we can.
Okay. Thank you so much, sir. On behalf of the Committee on Public and Government Financial Management of the Institute of Chartered Accountants of India, I extend my sincere gratitude to all the esteemed viewers comprising of Pan India ICI members and staff of ADB and World Bank for joining in this enlightening webinar on improving audit quality of external audit projects in India. I would like to express our sincere thanks to CA Ranjit Kumar Agarwal, Honorable President ICI, CA Kemisha Soni, Chairperson CPGFM, Mr. Srinivasan Janardhanan, Director Financial Management South and Central Asia Regions, and Senior Financial Management Officers Mr. Krishnendu Baran Sarkar and Mr. Anshuman Badalan from ADB. Mr. Manoj Jain, Lead Governance Specialist in Global Governance Practice and Country Focal Point for India, and Mr. Puneet Kapoor, Senior Financial Management Specialist from World Bank, for joining in this webinar and agreeing to share their expertise and insights from diverse perspectives. Your contributions have been incredibly enlightening and have provided us with a deeper understanding of the challenges and opportunities in this critical area of governance and financial management. I hope this webinar has contributed valuable insights towards improving the audit quality of externally aided projects in India, paving the way for greater transparency and effective financial management in these initiatives. Thank you once again, and I hope to see you at our future events. Thank you so
Thank you
much,
so
sir.
much. Thank you, sir.
you.
Thank you.
Thank you so much. Thank you.
Thank you.
Thank you, sir.
Thank you, all of you.